Yeah, look, I mean, this is money that's really earmarked to keep airline employment levels equal to where they were effectively through the summer of 2019. And, in my own opinion, it's actually coming at a relatively low cost of liquidity. Only 30% of it needs to be repaid via a low-cost loan. And I guess Treasury is asking for about 3% of that loan, the total grant value in equity warrants. That will be dilutive for most carriers, maybe 1 to 3%, depending upon how Treasury elects to take these warrants. But again, relatively low cost for carriers that need a lot of cash flow right now.
Where does that leave you in terms of your ratings on a lot of these names?
Well, look, we take these questions from investors almost all the time. Like, how do you differentiate? Clearly, Southwest had the highest margins going into this, the most fortress balance sheet. But even Southwest, by our estimation, is probably burning 30 to 35 million of cash per day in the second quarter. That compares maybe to a Delta, United, or American. That's probably burning 50 to 60 million per day. The carriers have actually, some of them have disclosed those figures. So it's really now a question about liquidity, and then when can we get people back to travel? If this goes beyond into the third quarter, the fourth quarter, I think all these companies need incremental capital. The government grant program definitely helps. I think that gets us through probably the third quarter. But given, uncertainty here, it wouldn't shock me if every one of these carriers actually lined up for government loans as well, which is another $25 billion that was set aside in the CARES Act.
Yeah, so it seems obvious that this will go into Q3 and Q4, maybe not in terms of a total economy-wide shutdown, but certainly in terms of people not traveling like they once did. If passenger traffic is down 95% year on year right now, what is the kind of relative decline where the airlines can start making money again? Is it minus 50%, minus 20%, minus 10%? I mean, how far do we need to climb back?
That's a great question, Kelly. We're modeling revenue down about 25% right now in the fourth quarter. I think we do have the companies finally printing operating profits by the end of the year. But there's a lot of question marks with that. How much capacity can we get out relative to a down 25% environment? I mean, I think the fact that we're not seeing any travel demand today, and, those figures are pretty shocking. Revenue down 95%. Some carriers are actually refunding more cash than they're taking in, so negative revenue on a cash basis, pretty profound periods of time here. But that does allow them to make, I think, more drastic capacity decisions. I think United's already said they're planning for down 30 revenue by the fourth quarter. So hopefully we'll see a right-sized cost structure. It's just no one knows if we don't have conferences, conventions going on anymore, where will travel demand be? The flip side of that is, if we get back to some sort of normalcy by 2021 and you put a normal valuation on this group, you could see a lot of upside for some of the carriers that could get through this with enough liquidity. So it's a really double-edged sword here for airline investors, for sure.